Welcome back for another video. Be sure to like and subscribe, and let's jump right into it. In this video, we're going to talk about sessions in trading. This is a really important concept to understand when you're trading because it understands or helps you understand when to trade and why the market will behave like it does at certain time frames. So this is a really good concept. It helps me to call out my trades in the Market Mentors Discord community. So if you want to see all of our analysis, our new positions, our winning trades, or just interact with us and ask us questions and go over some of our other resources, then click the link in the description to join, and I'll see you guys there. So just getting back to it, this video we're going to talk about why your trading session time frames matter a lot more than you probably think. So I'm going to make this a little general for all the assets in day trading because each category and pair can have its own nuances. So let's see, I'll pull this over. This might be a longer video, might be 2 parts to this, but we'll see. I'm going to type out all the notes that I can, get some clear chart. So looking at it, we're going to break this into probably 5 or so parts. And the first part will be just understanding what the sessions are. So there are 4 major trading sessions that move the markets, and this is just when people are around the world are active in their pretty much their own time zone, and they're just dumping their money into the markets and moving it in a certain way. And that will be, you have Asian session, and it does range differently depending on what time zone you're in, but I'll try to get those probably in UTC time. So you have Asian session, you have London session, and then you have New York session, and then you probably just have your overlap sessions. We can count those. The big 3 are really just Asian, London, and New York session. And you have your overlap sessions, which are with like 1 to 2 hours in between the sessions where there's not really any market volatility. It's just kind of consolidating, and then session open happens, and then it transitions basically to a different session. So we can count, I say overlap sessions, say those 4. So it'd be difficult to put it in time, but if we can just put it in, let's say, Eastern time or UTC -5 time. I guess it'd be 4 since daylight saving time has already happened. So yeah, you can just notice in the corner here. So UTC -4 time, we'll just say Asian sessions, typically if you're on this time frame, it's in the afternoon. So past the trading day, like 5 o'clock, so from 7 p.m. The full time frame is 7 p.m. to 4 a.m. Eastern. This does overlap with London session. In London, would go from 3 a.m. to 12 p.m. technically on that UTC -4 time. The New York session would go from 8 a.m. to 5 p.m. on that UTC -4 time as well. And the overlap sessions, they are really you see where there's these hours that overlap. So from New York, it'll be these little hours from 8 to 12 like that, or the 3 to 4, those are the overlap sessions. So the hours in between sessions are like 5 to 7. For Asian sessions, those are the hours where they mitigate. So hours in between, or let's see, session crossover hours. And I just put it in this time frame because that's the time that I'm in, but it does translate. These hours coordinate with whatever UTC time you're in. So that'll be an important thing to know. So understanding that each session will bring a different type of personality to the market. So Asian session, that'll be tend to be lower volume, and trades will be slower and probably a smaller range because it is lower volume. So those type of trades will be smaller range bound, but they'll be more technical trades. And then moving on to London session, there is more volume in London session than there is in Asian session. So this will typically open with some type of volatility because it is a much faster moving session than Asian session. And then it'll be a lot of cleaner moves as opposed to those slower range trades or smaller range trades where it might be consolidating a lot and just wicking a lot in small ranges. So I'll put cleaner trades here. there can be a lot of times not too much news, or at least high impact news, we'll say an Asian session, that's going to really disrupt the markets, but London session can have some high impact news, so that would be why it has more volatility, we can say. Then we'll have New York session. And I'll end up breaking this, it's probably 3 parts for this video, just a heads up there. So then we have New York session, and this is especially in the first few hours. It's very fast and reactive because it's a lot more volatility, and you have things like a lot more high impact news that really affects this session. So you have very fast and reactive trades, and it's often driven by news and momentum in this one, especially when it reacts to a lot of like liquidity and things that happened during London session. So this one, New York session, will be the really big session for the days if you want to trade higher impact, bigger, larger moves and see the market really shift. And that's pretty much it for, let's say, this is the part 1 for it to understand. So I'll put part 2 down here. We'll change this color. And part 2 is just understanding the different volumes and volatilities. Change the color for this one. So this is really going to be a good one because you don't want to get caught up whenever it's low volume. So volume will be equal to your opportunity to trade. This helps you get the strong pushes you're looking for in your trades for them to hit take profit or just hit stop loss and actually move your trade. You don't want to get in a trade whenever it's low volume and it's just consolidating and just wicking around and not really doing anything. You want to have those stronger pushes in your moves to either move the trade in your favor or out of your favor so you can look for your next opportunity. So volume does equal your opportunity. The low volume sessions like Asian session, they're great for scalping because it is going to be those smaller range trades. It's not going to be those larger, huge moves that you see in New York or London session. So those would be good for your scalping setups and just finding really precise setups. Put that as well, precise entries. Your higher volume sessions, like London and New York, will be big breakouts and institutional moves, hence the high volume moves and high pip or whatever current or amount you want to use to translate them or measure the movement, institutional moves. And that's pretty much it for part 2. You need to understand that each one of these, I kind of mentioned it, just the volume is different in all of these. This is why you see the market move a lot in the New York session time frame, or you might see consolidated Asian session. It has different